Hello and welcome to Pro Trader Strategies Market Commentary for Wednesday, June the 8th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your own portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios. Therefore, what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. Some economic data that we got across the pond really has kind of sparked the bulls into pushing this market higher, as well as crude oil. We had Great Britain manufacturing production come in at 2.3%, but it was expected at unchanged 0% increase, and industrial production came in at 2% increase versus the actual expected 0 increase. We also got crude oil inventories was a drawdown of 3.2 million barrels, and that was expected right dead on to what was expected at 3.2 million barrel drawdown. Crude oil was already rallying well before that, but that gave the bulls a little bit more fodder to push higher. I talked about this several times, that when crude oil gets above 50, that it's going to be a major resistance area, and if it gets above that, we could really start seeing this market pop to the upside. Yesterday we did settle above 50, and we are up almost 80 cents today, and I've talked about it, since we're above that, it kind of gives the green light to push up to test this $60 barrel area. Now that's over the long term, but that's looking like where crude oil wants to go to. Onto the NASDAQ, /NQ is the ticker. We're right here at a value area, trading sideways, but we are up 9 points on the day. The overall market's really slumped off, especially late in the day yesterday, and was looking pretty bearish, but today the bulls have come out in force, push the market higher, as we'll see on the E-mini S&Ps in a minute. But this is a value area, so this is going to act as a resistance for the most part. It's not exactly where all the price has been accepted. That's down here at this level here. That's where time and volume has been traded the most over the last year, and this could look to move a bit higher if we continue to trade here, which would be an indication that the bulls are winning and that we're accepting prices at these higher levels. Good for the bulls for sure, but I'd still see us continuing to trade back and forth through this area here and fill in that low volume area and create a nice big bell curve that I talk about seemingly every day, it seems like. As you can see here, E-mini S&Ps breaking above yesterday's highs, which kind of takes away the bearish look that happened yesterday with the big market sell-off at the end of the day. I mean, it wasn't huge, but it did create this doji here that, right there, that made it look like it was going to be a little bit more bearish. I thought we might come down and test this value area, but lo and behold, the bulls came out in force, probably off that economic data that we saw overseas in Great Britain. As you can see, yesterday's late day sell-off continued overnight, but then when we started seeing that economic data from across the pond, the market really started pushing higher right off the open, ran up, made new highs, and have since kind of bounced back and forth, if you will. The market didn't really did kind of do a bit of a turnaround, I should say, at that crude oil inventories number with the drawdown. That's going to give the green light to the bulls and the equities, just because if there's more of a drawdown, people are consuming, and that is bullish for the overall economy, if you will. On to a couple trades that I've done. Kellogg here. I ended up doing a strangle in Kellogg just because it's got pretty good high implied volatility. It's not exactly what I'd like to see at above 50, but it's right there, and with everything that we've seen lately, there's difficult to get up to these high volatility levels that we saw back in the end of last year, beginning of the year here. So I decided to go ahead and sell a strangle around this one, and went into the July, sold the 72.5 puts with the 80 calls to create that strangle, and I collected $1.30 for that. And the reason why I like this one is because my 80 calls where I'm short is above the high that we've seen in Kellogg, ticker symbol K. And so that puts my break even at $81.30 to the upside, which would be well above this high that we've seen. And it looks like there's a lot to get through to get above 78 again. And on the downside, this is looking like a really nice support area. Without any news, no binary events, I don't really foresee anything else other than kind of a choppy sideways market in this, and hopefully see a little bit of the volatility come out of that rather quickly. So to the downside, my break even is right around $71.20. So anything in between there is going to be a nice little profit, and I'll look to take that one off for 50% of it, so right around 65 cents. And in GE, I did this one, and I kind of stepped into this one a little bit early. It was an email I got from Steve Primo on the downside. It really needed a break below yesterday's low for this to really trigger, but I stepped into it anyway just because I wanted to add a little bit more downside delta, or negative deltas, if you will. My portfolio is getting a little long in the delta side, so I wanted to add some shorts to that market. So I went into GE a little early, not really following his rules so much, but it still looks pretty bearish. As long as it stays below this SMA, I think I'm going to be looking okay. And did the June the June weeklies that expire on the 24th, and bought the 29.5 puts in there and paid 21 cents for that. So looking for it to just come down here and trade to 29.5, which is basically lockstep with his target. So if we can get that, then that'll be a real quick hit for me. On Friday, we're going to be doing the webinar on call calendars, and so I decided to do a call calendar here in Walmart. Walmart is one of the few retailers, if you will, that are doing rather well off their earnings. They showed that they had forward expected increase in sales, so that they were pretty bullish on the overall market for them. Walmart seems to be unstoppable for the most part, and so I decided to go into the August-July 72.5 call calendar. So I bought the August 72.5 calls, sold the July 72.5 calls to help finance that a little bit. So as long as we stay below 72.5 going up, which is right there at that volume node that I talk about, that could be a magnet where the market wants to go, but hopefully we'll pause there and trade below that, at least for the greater part of July, so I can get my full credit for that July to help finance that August, and then continue higher and test these highs sometime soon. So long delta play on that one for a bullish market. And I'm going to be going into all the rules and details as to how to set this up on Friday in the webinar, on the call calendar webinar. So the more the merrier on that. And you can go to protraderstrategies.com and sign up for that. Hope to see you there. If you can't take that, take it easy.